Okay, welcome everybody. We have a very large crowd today, a record-breaking crowd as it were. And we're going to get started in just a moment here, but just want to get a little housekeeping out of the way. While people are logging on here, we want this to be interactive. So please use the questions pane in your Zoom control panel to ask questions as we go. We've got several people with us today. I'm Sean Moss with Down Payment Resource. In operations and customer support. We have Fern White, our account manager. We have Melinda Harris in marketing, and they're going to be in the background answering questions as we go, interacting with you, engaging with you, and so forth. So keep this interactive. If you have questions, if you have success stories, if you have ideas, if you have tips for working with first-time homebuyers, feel free to share those, and we'd love to engage in some dialogue. We are going to record this. So you'll get the recording afterwards, and in case you want to share it, and then we'll leave time at the end for Q&A. So I just want to get a quick maybe show of hands if you want to, or just put a quick comment in the chat box. If you see the screen, it says Down Payment Programs 101, what every agent needs to know. If we can just get a quick yes or a thumbs up in the chat box, make sure that we're good to go. Okay, and here they come. Good deal. So. All right, let's go ahead and get started. So I am Sean Moss, Director of Operations and Customer Support with Down Payment Resource. And today we want to talk about the basics of down payment assistance programs. So we're going to compare three of the most common types of homebuyer programs. And we're not trying to make subject matter experts out of anybody today. Today is really all about getting the basics down, talking through some of the most common or universal requirements of homebuyer programs, and making sure that you have the tools, the knowledge you need to go start conversations with prospective homebuyers. We're hearing more and more over the last several weeks about maybe some pent-up demand. We know that there are going to be some concerns and some issues facing homebuyers. We also want to make sure that we're equipped to discuss those, but one of those solutions going forward is going to be, oops, let me start the recording here. I'm sorry, guys. Bear with me just a moment. And looks like we are, okay, resume. Okay, Mel, real quick, we are recording now, right?
Yes. Yes.
Okay. All right. Sorry about that, guys. So I'm Sean Moss with Down Payment Resource, and we've got Fern White, our account manager, and Melinda Harris, our marketing manager in the background. They're going to be answering questions. So we're going to talk about down payment programs or homebuyer assistance programs basics. We're not trying to make subject matter experts out of anybody. What we want to do is empower you with the basics, the knowledge, the tools, the resources that you need to go start conversations with prospective homebuyers. So that's the goal today. Our company, Down Payment Resource, is about 12 years old now. We track and monitor all of the homebuyer programs across the country, from state housing finance agencies, cities, counties, nonprofits. You'll see more about who provides these programs here in a couple minutes. But our goal is to help you connect homebuyers to the down payment help they need. We've heard a lot about pent-up demand. Maybe there's a burgeoning homebuyer market coming or purchase market coming. We want to be prepared for that. We know that there are going to be some concerns, some issues that need to be addressed. We know that down payment is going to be a big driver for fueling home ownership going forward. So that's the topic today, is to help solve for the down payment problem and to give you guys a basic understanding of homebuyer programs, what's unique about them, what's different about them, what's universal about them. And we'll show you some sort of extra benefits and outlier scenarios that can help you corral more prospective homebuyers and serve them and educate them and bring them forward in the purchase pipeline. We track all of the well over 2,000 homebuyer programs around the country, and we also integrate with some of your MLSs. We have a lot of real estate agents on this webinar today. Some of your MLSs are partners of ours. We'll talk about some of the benefits that provides to you, and we'll show you some tools and resources you can use. So before we get started here, I want to actually launch a poll. So Mel, if you can launch that poll, let's figure out what your mix of first-time home buyers looks like in your pipeline. So if you can just click your answer on the screen there, what percentage of your business is made up of first-time home buyers? Is it a very small percent? Are you a majority first-time home buyer realtor? And if you can click that on the screen, and Mel, if we get to about 70, 80% votes, we'll go ahead and share the results. But guys, go ahead and click your answer on the screen. And again, tell us what percentage of your business is made up of first-time home buyers. Not that we're exclusively talking about first-time home buyers when it comes to down payment assistance programs, and more on that in a few minutes as well. But by and large, these programs are available to and serve the down payment need of first-time home buyers. So it's important that we recognize these opportunities when they exist and tie them to the appropriate audience. So here you go. Here are the results. So we've got a lot of you here that work with almost exclusively with first-time home buyers. About 15% of you are working with almost exclusively with first-time home buyers. For those of you that aren't working with very many first-time home buyers, maybe we know that could be for a number of reasons. You do a lot of commercial, you do a lot of luxury, you do a lot of second homes, reloads. It could be any number of things. We would encourage you to take the message that you hear today and the content, and Mel, we can get that off the screen. Thank you. And take this message, this content, this idea of down payment assistance, and bring it to your referral base. Perhaps your clients have referral opportunities for you for children, your peer network, those that are coming into their home buying years. But by and large, back to the presentation here, what we're talking about today are loans, grants, tax credits, and other programs for eligible buyers that can help do a couple of things. Achieve the down payment faster, as in faster than saving for many years some small portion of their income. These programs can help cover that down payment faster, cover closing costs, and expedite home ownership. And that's one big goal here, is for people to recognize the opportunity to get into home ownership perhaps sooner than they would have otherwise, by way of utilizing and taking advantage of a down payment assistance program that doesn't require many years of saving and gives them the opportunity to explore home ownership now. So that's broadly speaking what we're talking about. There are a lot of different kinds of home buyer programs. We're going to get into a lot of them, or the three most common in particular. But when we say down payment assistance, that can come in many forms. And we're going to break this down a little bit further into the webinar here. But there are grants, which are essentially true gifts. There are second mortgages. Those can be deferred. Those can be forgivable. Those can come with monthly payments. We're also going to look at mortgage credit certificates, which are tax credits. Now, as you can see here, the most common, most popular type of home buyer program is down payment or closing cost help. Mortgage credit certificates are actually tax credits, and we'll get into those as well. And we also track first mortgage loans, affordable first mortgage loans that offer some unique benefits and advantages, typically from housing finance agencies. We also, in our system, we track other programs like matched savings, individual development accounts, housing vouchers, and so forth. But we're going to focus today on the three most common types of home buyer assistance: down payment assistance, or DPA, mortgage credit certificates, those are the tax credits, and first mortgage loans. Now, for context, geographic context, these programs are available across the country. Every state has a state housing finance agency, at least one. A lot of states have local housing finance agencies in some of their bigger anchor markets. There are municipalities, nonprofits, housing authorities, land trusts, community development departments, and so forth, all over the country that either receive funding from HUD or fund their own down payment assistance or home buyer programs. So quite literally, every market is covered by some kind of down payment help. And then, as you can imagine, the bigger the state, the bigger the market, the more money comes in from HUD and other sources, the more program providers there are, and the more programs there are. But every market is covered. Now, who offers these programs? We've touched on this a little bit, so I won't go into too much more detail here, but every state has a housing finance agency. There are many local housing finance agencies in markets all over the country. Cities, counties, and other municipalities, housing authorities, nonprofits, employers sometimes offer down payment assistance as a way to recruit or retain talent. And there are others, and we've mentioned some of those. But you start to get the feel for the diverse array of program providers. And then when we think about the programs themselves, we'll drill down into the details of what makes a DPA, what are some of the universal requirements, and so forth. Just a quick side note, there's been a lot going on in the market. There's been a lot going on with down payment assistance programs. There's been perhaps some false narrative too. We want to be clear, and we track all of this. On our website, we have a link to a COVID update page where we've been tracking and monitoring the impact on down payment programs of the COVID pandemic, whether that's policy changes from HUD, Fannie, Freddie, whether it's master servicers of these programs and so forth. So we don't want to get into the weeds here on that topic other than to let you know we are tracking those trends. If you go to downpaymentresource.com, at the top right, there's a button that says COVID. You can track the impact on DPAs. I will leave you with this, though. Every state housing finance agency is and has been open for business as usual. Some of them seeing record volumes. 81% of all programs across the country were active, funded, and available at our last check last week. And only about 2% of programs were paused temporarily because of the COVID pandemic. So DPAs are active, business as usual, and we'll talk about some of your partners. A few other trends here. Homebuyer education, we're going to talk more about this later. Obviously, that's being done online exclusively at this point. We don't know when that will change. We'll see. But a lot of the in-person classes that you may have been used to in the past, they'll come back. But homebuyer education being done online is not new, but it's been an exclusive trend recently. There are a few hot topics among lenders when it comes to down payment programs, but we've seen some of the market fluidity subside. So hopefully we're sort of balancing out here and coming out the other end, but time will tell. I'm not an economist and I'm not trying to forecast, just letting you know the state of DPAs, if you will. Now, I want to take stock of where we were prior to the COVID pandemic. We saw a survey from clever.com. This was, I believe, in January of this year, very early this year, that asked millennials and survey participants from other generations where they intended to get their down payment when they bought a home. And among millennials, the second most common answer, second only to saving money for their own down payment or saving their own money for a down payment, was using a homebuyer assistance program. And look at some of the other alternatives: additional income, bonuses, family members, loan from a family member, trust fund, inheritance, gift from a family member, retirement or non-liquid assets. Using down payment assistance programs was the second most popular answer among millennials, and a big portion of them indicated that that's where they intended to or expected to accrue or receive their down payment. So what that was telling us at the time, and I think what it still says, is that there's growing awareness of these homebuyer programs among consumers. And that's interesting. And it's also, we should pay tribute to all of you on this webinar, because the way that a consumer typically finds out about a down payment assistance program is going to be through a loan officer or a real estate agent. So you guys are talking more about these programs and exposing more buyers to the potential and the benefits and the possibilities that they bring about. And that's showing up in consumer expectations. So we don't want to lose sight of that. And we want to make sure that we continue to drive home that message, bubble up these opportunities, and meet the down payment issue with down payment assistance solutions. So before we start breaking down the three most common types of homebuyer programs, I want to take a moment just to look at some of the universal requirements, whether it's a tax credit, an affordable first mortgage, or a down payment assistance loan or grant. There's a myth out there, especially among younger prospective homebuyers, the millennial generation, that you have to have 20% down to purchase a home. And that's a misperception that's perhaps based on having been brought up during, the mortgage meltdown and economic crisis and so forth. And wherever it stems from, we know it's not true, right? All of us on this call know that you can get an FHA loan with 3.5% down. There are 3%, 5% down conventional options. If you're VA eligible, or if the property is USDA eligible, there are 0 down options, right? But some of the universal requirements of these programs are, first of all, you have to qualify for a first mortgage. So it's so important that we make it clear to prospective buyers and head off that misperception that You don't have to have 20% down to talk to a loan officer and get pre-qualified, to call a real estate agent and have a discussion about your possibilities. What they need is to understand down payment requirements. And that's going to happen in a conversation with somebody who can, educate them and pre-qualify them and push them forward through the purchase experience. The other universal requirements, most of these programs require homebuyer education. We are big believers in homebuyer education here at Down Payment Resource because of not just the short-term value that it provides to your clients to help them become better educated home buyers, but also the long-term value that it brings to them as successful home owners. And we'll talk more about homebuyer education here briefly. There's also typically a minimum buyer investment, so there is skin in the game. Homebuyer education itself, I would argue, is skin in the game as well. That's a time commitment, that's an educational commitment, but many of these programs do require some minimal financial investment on behalf of the borrower. That's going to vary by program, but it is a pretty universal requirement. And lastly, these programs are for owner-occupant buyers. Down payment assistance is not for people buying a vacation home or an investment property. These programs are for people who intend to occupy the property they are purchasing as their primary residence. Now, let's break down the specifics. We're going to first look at down payment assistance programs, and then we'll look at the two other most common types of homebuyer assistance, which are affordable first mortgages and those tax credits that we mentioned earlier, mortgage credit certificates. So first, I want to look at down payment assistance. So let's dive into that. That is the most common type of homeownership program. In most markets, there are quite a diverse array of down payment assistance options from municipalities, nonprofits, of course, your state housing finance agency, local HFAs, and so forth. So many of these are nonprofit or government funded. Those government funds can come down from HUD through home or community development block grant and so forth. Some are funded by employers. We mentioned that earlier. And they can range from a few thousand to, in some markets, typically higher cost markets, tens of thousands of dollars. And that's an important point. We'll talk about this later too, but you'll see that income limits and purchase price limits and assistance amounts often reflect the medians in their market. So you'll see higher income limits and higher purchase price limits and more assistance dollars in Southern California or Boston or New York than you might see in mid-America or somewhere that's not a higher cost, more expensive market. So that's just sort of tip of the iceberg here. We did mention earlier, when we say down payment assistance, that's a broad identifier. That's a broad category. That can break down to grants. Grants are a gift at closing, right? There's no second lien, there's no repayment required. But then for second mortgages, some of those down payment assistance programs can be repayable, meaning you close, there's a payment, you start making payments on the down payment loan as soon as you start making payments on the first mortgage. There are plenty of programs that are deferred or silent seconds, meaning payments are deferred for some period of time, and maybe it's due on sale or due on transfer of title, maybe it balloons at some point. And then there are forgivable down payment assistance programs. Typically, those come with an affordability period, meaning if they stay in the home for 3 years or 5 years or however many years, then over time or after that time has elapsed, that down payment assistance original loan amount begins to be forgiven, and in many cases is completely forgiven once they've stayed in the home for so long. So now you can already start to see how down payment assistance, or DPA, is just sort of a broad category of program types that break down into these other nuances. What are the eligible uses of these funds? Obviously, down payment, closing costs. Some of them could be used to pay prepaid expenses. There are some programs that will allow for repairs or rehabilitation of the property. That can be particularly helpful for disabled household members, properties that maybe are not quite market ready, and with a little bit of rehabilitation or repair can be brought to market ready. So those are some of the most common or most frequent eligible uses of these funds. Now, we mentioned first-time homebuyers and that we were going to come back to it. Another myth out there is that these down payment assistance programs are only for first-time homebuyers. And we want to clarify that. It is quite true that first-time homebuyers can use just about any down payment assistance program. But more than a third of the programs in our database, or more than a third of the programs across the country, do not have a first-time homebuyer requirement, or will waive it for some scenarios we'll look at later, targeted areas, veterans, and so forth. But there are plenty of programs that just don't have a first-time homebuyer requirement, meaning a current owner or a repeat buyer can take advantage of that program. Now, it's also important to remember that the definition of a first-time homebuyer is simply somebody who has not owned a home or had ownership interest in a property in the last 3 years. And there are even some exceptions to that. So that's important to keep in mind. That's an expansion of our target audience then, right? We're not just talking about first-time homebuyers here. And that's in part why we asked that poll question earlier. Yes, these programs are definitely relevant for first-time homebuyers, but that's not exclusively our audience. Our audience is bigger than that. Repeat buyers, potentially current owners. It's worth exploring all of the programs available in your market to understand where those opportunities lie, so that you can bubble up those opportunities in conversation when you're talking to somebody maybe who currently owns and is looking to move for a job or move up, or whatever the reason is that they might want to move. Now, I want to go over some of the common terms you might hear. You might hear DPA or DAP, grant, forgivable, deferred payments. We talked about affordability period. You might hear DPAs called a second lien, second loan, subordinate loan, second mortgage. They're all sort of basically describing down payment assistance. When you get into forgivable versus deferred versus grant, now you're kind of describing the repayment structure or the repayment terms of that program. But I just want to be clear, when we say DPA or DAP or second loan or subordinate loan, that's basically down payment assistance. This is sort of a broad way of describing what really is in a wide array of repayment terms and benefits and assistance amounts and so forth. Some programs come with shared equity. That's not quite as common, but you may see that in some cases where you'll get the down payment assistance up front. And then when you sell the home as the buyer, the entity that provided the down payment assistance will get a share in the growth in equity of the home. So not the total value, but just the growth in equity. But anyway, that's not common enough for us to digress for too long. Now, let's talk about eligibility for these programs. So most of these programs have income limits. I mentioned earlier, they are often market adjusted. And in fact, they're quite literally often based on the area median incomes in that market. So HUD has calculations they use to define median incomes in a given market. Fannie and Freddie, they do the same. But those income limits will reflect the medians, and that means that in higher cost markets, you're going to have higher income limits. Now, I'll also tell you that the income limits for many programs are quite often above the median, which is the average in that market. So you might see income limits up to 120% of the area median, or 140% of the area median income in that market. That means they'll go 20% or 40% or even higher above the average income in that market and set their income limits for that program there. Same thing with sales price limits. They're based on median prices in the market. And so they're going to be higher in high cost, maybe coastal markets than they will be elsewhere. Property location also plays a big factor here. If you think about, every state has a state housing finance agency, but then you've got cities and counties and nonprofits that also offer programs. Their jurisdictions are different, right? One city is not going to offer their program across multiple counties, for example. So the location of the property being purchased, that's really kind of the first driver for which down payment options are on the table for that buyer. What is available from the state? What is available from the county where they intend to purchase? What is available from the city where they intend to purchase? Are there nonprofits that operate in that region or in that market whose programs might also be available? And you start to get a feel for the layers of opportunity and the diversity of opportunity that might be available just based on location. And then, of course, you have to income qualify. You can't purchase a $1 million home in Atlanta with a down payment assistance program, but the purchase price limits, income limits being market adjusted, the property offering layers of opportunities based on location. Then you get into FICO and credit. FICO, typically the absolute floor typically is about 620. Some programs cap the FICO at 640 or 660. There are some temporary overlays that are a little bit higher right now, but we expect those will start to dissipate as this pandemic sort of clears the path for normalcy. Then, of course, home ownership history. I think we've talked about that. There's not a first-time homebuyer requirement for every program, and it's important to know where those ones are because that expands your audience. Now, we'll talk about these last 2 points here in a little more detail in a few minutes, but military service, current or past, can have a big impact on your eligibility for down payment assistance and on the first-time homebuyer requirement because that is often waived for eligible veterans or active duty military. Profession can also play an important role. And we might see some changes there. We saw some interesting developments over the last couple of weeks, expanding on the definition of heroes, if you will. There are programs in some markets, not every market, that are for what I'll just broadly call heroes. And we're going to look at this in more detail, but think first responder, law enforcement, education, healthcare, and we'll talk about some of the expanded definitions in a few minutes. All right, now, what are the advantages of down payment assistance programs? Well, you're lowering the loan to value. So first and foremost, that sort of kicks off a number of other benefits. But the more down payment, the lower the loan to value. That can open up better first mortgage options. That can improve mortgage insurance pricing by reducing the mortgage insurance cost. That starts to lower the debt to income ratios. Lowers monthly payments, of course. The lower the LTV, the lower the loan amount, the lower the monthly payment. That means that the buyer can potentially retain some of their savings, or they can remain liquid. They can keep some of their money in their checking and savings. They can supplement their cash to close with the down payment assistance program and move into the house with a cushion to prepare them for some of the immediate or short-term costs, or, heaven forbid, some emergency. The water heater blows, a tree falls on the roof and puts a hole in the roof. Those kinds of things are going to happen. But if they're moving into a house with no cash because all of their cash was spent on the down payment, they're not going to have that reserve cushion for the basic expected costs of ownership. And then, of course, the unexpected costs or emergency costs that could easily arise. All of that basically compounds their purchasing power. So without a change in income, lowering the LTV, getting a better first mortgage with a better interest rate, better mortgage insurance pricing, all of these things compound or increase the purchasing power of that particular buyer's income. So those are some of the advantages. And then we mentioned earlier, homebuyer education. That's a universal requirement of most homebuyer programs, whether it's down payment assistance, a tax credit, and so forth. It's typically required, typically from a HUD certified homebuyer education provider. In the past, we used to say there are online options, and that is increasingly popular. Currently, you can basically only do homebuyer education online, but there are and have been well-run, HUD-approved online platforms for homebuyer education. And as I mentioned earlier, we're big supporters of homebuyer ed, not just because it prepares the buyer for that purchase transaction, but because it helps them plan for and become successful home owners long-term. All right, now that's a quick overview of some of the most basic, qualifying parameters and benefits and so forth of down payment assistance programs. We do want to spend a couple minutes here talking about the other two of the most common homebuyer assistance program types. The next one is affordable first mortgages. Now, we mentioned earlier, anybody using a down payment assistance program has to qualify for a first mortgage. Every lender obviously has first mortgage options. What's unique about what we're talking about here, affordable first mortgages, typically from your state housing finance agency or some other local housing finance agencies, are that these programs often can come with reduced interest rates or below market interest rates. There can be an expanded pool of first mortgage options. Some of them include reduced mortgage insurance costs. That's a big driver for increasing affordability, is reducing the mortgage insurance cost. And often, of course, these are combined with that housing finance agency's down payment assistance program, and sometimes even with the tax benefit of their mortgage credit certificates. So there can be a lot of benefits of exploring the first mortgage options from a housing finance agency in conjunction with the down payment assistance or tax credit that they may offer as well. Some of the advantages, similar to down payment assistance, as you would expect, reducing the buying costs. If we can get the rate down, the mortgage insurance down, the LTV down, all of these things contribute to reducing the buying costs, reducing the monthly payments, and again, increasing the purchasing power of that buyer's income. And all of that, as we mentioned very early on, helps to expedite home ownership. And that's what, it kind of goes back to the point of the webinar today, and what we want your takeaway to be is, what's the basic message I can take to my prospect base? I can take to my email audience, my social media audience. What's a basic message I can take to them that will open their eyes to the fact that maybe they can, maybe now is the time, maybe home ownership is something that you're ready for, something you should explore, something we should have a conversation about, rather than waiting and suffering from some of the misperceptions that we've elaborated on here. All right, so I want to wrap up the breakdown of these 3 homebuyer program types with mortgage credit certificates. And then we're going to show you some other scenarios where additional or unique programs may be available. And then we'll wrap up with some resources for you to help you out. But the third most common type of homebuyer program, we talked about DPA, we talked about affordable first mortgages. Now let's talk about mortgage credit certificates. Put simply, it's a tax credit. Now, to break that down a little bit, it is a federal income tax credit, not a deduction. So if you think about when you file your taxes, if you're a homeowner and you take the mortgage interest deduction, you're reducing your taxable income by the amount of mortgage interest that you paid. The difference here is that a tax credit is a dollar for dollar reduction of your tax bill. So anytime you have a tax credit, you're going to get a bigger benefit, more immediate, noticeable benefit than a deduction. And that's what these mortgage credit certificates are. Many states, not every state, offers a mortgage credit certificate. Typically, they come from a state housing finance agency. They do have to be acquired when you purchase the home. So unfortunately, you're not able to retroactively go back to the state after you've closed and purchased the home and ask for a mortgage credit certificate, which again drives home the point. This is the time to be having a conversation with a prospective buyer about the benefits of some of these programs. So there's life of loan value in these mortgage credit certificates as well. Let me explain that. This is a benefit that is available every year when they file their federal income taxes for the life of that first mortgage, and sometimes through a refinance as well. So that means of all the interest that they pay, some portion of it can be claimed as a tax credit, but then they can still deduct the remaining mortgage interest that was not claimed as a tax credit. I'll give you an example of that in just a moment, but basically the benefit of a mortgage credit certificate is that it reduces their income tax liability every year and increases their qualifying income in some cases. Some MCC providers and lenders will allow you to recalculate qualifying income by basically taking the tax credit they know you're going to get at the end of the year and annualizing that to increase qualifying income at the time of purchase. So to simplify that, if you're getting a mortgage credit certificate, they could potentially apply the value of that credit to your income as increased qualifying income, knowing the credit is coming down the road. And some of those, as I mentioned, can be reissued through a refinance. Now, I do want to give you a quick example of how this works, but I won't get into a complicated calculus lesson here. Take a $200,000 price and a 4% rate. That's $8,000 a year in interest paid. Mortgage credit certificates will allow anywhere from 10 to 20 to 30% of the mortgage interest paid to be claimed as a tax credit. So if you paid $8,000 in interest and the mortgage credit certificate in your state allows you to claim 25% of that as a tax credit, then that's a $2,000 tax credit. The other $6,000 in mortgage interest that you paid can still be deducted. And if you think about some of the changes to tax law recently, that's a huge credit considering that standard deductions are a lot higher than they used to be. So the value of deducting mortgage interest has dissipated. The value of a tax credit has increased. So we'll leave it at that so we don't get into any complicated math here any further than we already have. Nonetheless, bring it up. Look for mortgage credit certificates in your market. See what your state offers. Maybe a local housing finance agency has one. It's a great benefit, and it is life of loan. They get to use this every year when they file their taxes, so long as they have that mortgage, and sometimes even through refinance. Now, we're going to get into some other unique features and benefits of programs. We'll talk about target audiences, targeted geographies, and so forth, where there may be additional opportunities available, and great ways for you to muster up business and start conversations. But before we do that, Mel, if we can launch our other poll here, we just want to get a feel for working with DPAs and what your experience is there. So here's the poll on the screen. Tell us, how often do you work with buyers using down payment assistance? So the first question we asked earlier was, how often or what share of your pipeline is first-time home buyers? What we're asking here is, how often do you work with a buyer who used or uses a down payment assistance program? Frequently, never, rarely, sometimes. And what we're trying to do here is just gauge everyone's comfort and experience with down payment assistance programs. So go ahead and click your answer on the screen, and then Mel, if we get to critical mass, then we'll go ahead and share the results. All right, so we'll give everybody another second or two here. We got a huge crowd today, so if you looked away or if you're texting, come back to the screen here for a moment. Click your answer on the screen. Tell us how often you work with a buyer using down payment assistance. And Mel, maybe let's go ahead and share the results we have. So a third of you have never worked with a buyer who's used a down payment assistance program. Guess what? Surprise, they're out there. DPAs, that's the way forward, or at least it's a way to start new conversations with new buyers and help them explore the opportunities that are out there. It's also a great way to strike up a relationship with loan officers that work with these programs and can help elaborate via their expertise on the benefits, on the impact on contract, on setting expectations and timelines and so forth. It doesn't have to take longer to do a DPA transaction, and that's what a loan officer can help set up and set expectations for. So almost a third of you have rarely worked with a buyer who uses a down payment assistance program. Some of you are doing this frequently, and I'll tell you this, we see a lot of, especially real estate agents around the country, or people who start or found a team, they'll start with first-time home buyers, and they'll start with down payment assistance. They'll partner up with a loan officer or two. They'll bring in new realtors. They'll start their business with first-time home buyers and then gain that long-term upsell and referral business down the road. But it's a great way for somebody new to the industry to get started working with, or at least becoming familiar with, down payment assistance, because typically when you start in the business, you're working with first-time home buyers. Nonetheless, I don't want to preach to the choir, so let's get that off the screen here. And let's talk about some other unique scenarios, benefits, requirements of home buyer assistance programs. Let's talk about targeted areas first. So many program providers, especially state housing finance agencies, they will have unique benefits or advantages in targeted areas. Those can be census tracts, zip codes, entire cities, sometimes entire counties, where there may not be a first-time home buyer requirement. They're typically going to be in sort of core metro areas, so anchor markets. There may be more down payment assistance money available. Income limits will sometimes be higher than elsewhere in the state. Sales price limits, likewise, may be higher. But of course, that's all limited to those specific targeted locations. It's worth knowing where those are. It's worth talking to your loan officer partners. And I'm going to inject more about your partners here going forward, give you some ideas of who to go talk to. But it's worth exploring these to understand where those targeted areas are and where those benefits may exist. Targeted professions. So educators. Now, that's a broad term, but these are professions for whom there may be additional programs or programs unique to that audience. And I'm actually going to spend more time on this than normal because we've seen some interesting developments in this regard recently. But educators, that doesn't just necessarily mean teachers. It depends on the program, but some programs that are, hero programs or teacher programs, the definition of an educator may actually, in some cases, extend to faculty, staff. Let's say it's a state or a county program. It could be employees of that school district or ISD, whatever state you're in. So that's important to know too, because it might be commonly called a teacher program in the market, but the definition of an educator could mean any number of things beyond just the classroom teachers who would qualify for that program. Law enforcement, same thing. Could be corrections, sheriff, police, and so on and so forth. Firefighters could also be EMTs. Healthcare workers doesn't necessarily just mean the nurse. It could be technicians. It could be practitioners. It could be any number of things. Point is, it's important to understand the definition of those eligible professions or eligible buyers and how that program defines those heroes or the professions. Because what you may find is the potential audience is a lot wider than just, as I mentioned earlier, teacher, right? You would just think, okay, you got to be a classroom teacher. A pre-K teacher wouldn't qualify. A parapro or a librarian or the school nurse or cafeteria staff or whomever else wouldn't qualify, right? But it's actually the opposite. They may in fact qualify, and that expands your audience. Now, I said I want to spend an extra moment on this. South Carolina Palmetto Heroes program. We want to point that out. They've expanded their definition of heroes for this program that comes out once a year. Typically goes pretty fast. It's kind of a different funding source, but it's a hero program. They've expanded their definition of a hero to include Amazon staff, to include grocery store employees, and several other categories that we hadn't seen defined as heroes before. But thinking back on the last few months, we say absolutely, they deserve it. They've been on the front lines, in addition to healthcare workers especially. But nonetheless, I wanted to point that out. We'll see if that trend evolves in other states. But if you're in South Carolina, check out the Palmetto Heroes program. It just hit your market, very popular every year. All right, so enough about that topic. Let's also talk about military and veteran benefits. I mentioned earlier, one of the most common benefits for veteran home buyers or military home buyers is the waiver of the first-time home buyer requirement. Now, sometimes we'll hear, well, they're eligible for a VA loan. That's a no down payment loan. They don't need down payment help. Okay, sure, that's factually true. However, they still have to cover closing costs. Are they going to ask the seller to cover closing costs? Or what if you had a down payment program that could be used for down payment and closing cost help? They didn't have to ask the seller. They could make the same offer. The seller nets more. You just got a more attractive offer for the seller. Your buyer just made a more attractive bid. That's a win-win for both parties. The down payment assistance program covers closing costs and maybe even some of the down payment so that they go into the house with closing costs covered and equity in the property with the VA loan. How's that a bad scenario for a veteran? So think about scenarios like that. Same thing for teachers and so on and so forth. USDA loans, use a down payment program. Sure, you don't have to have a down payment, but it doesn't hurt. PenFed Foundation's Dreammakers Grant. That's a great example of a program for veterans. It's a matching program. So they'll match up to $5,000, 2-to-1, for every dollar that a veteran or active duty, and they even work with reserve and guard. But so the veteran puts in $2,500. The PenFed Dreammakers Grant will match that 2-to-1 and give them $5,000. So they've got a total of $7,500 for down payment and closing costs. And it's a grant. It's not there's no second mortgage, no second lien. It is a grant program. So it's a gift at closing. That's basically $5,000 in addition to the borrower's own contribution that they can use for closing costs. They could use it as a down payment if the seller pays the closing costs, or they can, however they use it, they're supplementing cash to close. They're retaining some of their liquid savings, and they're getting a better deal moving into their house. Now, how can we help? We've given you a lot of information here. We want to have some concrete takeaways for you. So we want to give you a couple of ideas for how to help. You can always go to downpaymentresource.com. It's easy to put in a location, put in a little bit, whatever you know about a client or a prospect, and figure out what down payment help, what tax credits, what affordable first mortgages are available for that buyer. So that's one way you can explore the options, do a little research on your market, get a little bit of information that you can take into your marketing. That, again, is social media, email, phone conversations. When we get back to it, open house dialogue, open house, deliverables, printed material, and so forth. When we get there again, right? But thinking ahead, that's sort of normal market conditions. So we want to be thinking ahead as well. If you are in California, you can go to downpayment.car.org. The California Association of Realtors provides a little bit more information about those down payment programs for CAR members. So you can only search in California, but it's a great way to get some deeper insight and deeper intel, as well as some marketing resources from downpayment.car.org. Your clients can also go to finddownpayment.car.org and do a search and find some programs. If your MLS is a partner of ours, so check out the screen here, these are our MLS partners. With these MLSs, we have integrated down payment assistance program information into your listing system so that when you list a property that night, we will see it, and we will every night update the down payment assistance eligibility of that property based on location and price, among a few other factors. But essentially, based on where it is and the list price, we're going to tell you if it's eligible for any down payment programs. And if so, you can click that and you can see which programs are out there. That is already up and running if your MLS is listed here on your agent reports, as well as the client reports that go out through your client portal. But for a few exceptions, most of you have that as well. Look for this button. If your MLS was listed on that previous page, look for this, click it when you see it. It's going to tell you which down payment programs are out there. You'll see it in agent single line, agent detail reports. You'll see it in the client portal in various report formats and instances. And additionally, you have Down Payment Connect. So if you are a member of one of those MLSs, you also have Down Payment Connect waiting for you. Log into your MLS dashboard, go to the Down Payment Resource dashboard, and your Down Payment Connect lead generation landing page is waiting for you there. Get it out to consumers. Let them search for down payment assistance programs in your market. They connect directly back to you and only you. It's unique to you. And you can use that in social media. We see a lot of great stuff happening on Facebook, Instagram, LinkedIn. We see a lot of creative email marketing, see it used in email signatures. So check that out. If your MLS was not listed on our MLS Partners page, you can still subscribe to Down Payment Connect. For real estate agents, it's $24 a month at downpaymentresource.com/DPC for Down Payment Connect. I don't know how many loan officers we have, but there's also a version for you as well. But we encourage you to check that out because it's a great lead gen tool. Again, though, I'm going to actually go back here. If your MLS is listed here, don't pay for Down Payment Connect. You already have it. If your MLS is not listed here, downpaymentresource.com/DPC, you can check that out as a great way to supplement your marketing, your education, and your lead gen efforts and bring awareness of down payment programs to consumers, capture their contact information, engage them in dialogue, and start new conversations. So that tool basically gives you your own unique lead gen page. Consumers come to it, search for down payment programs, find out that they even exist, right? And then which programs are out there for them. But without any program details, we just send them a search confirmation. We send you the lead. You get to have that conversation, hook them up with your loan officer partner, get them pre-qualified, get them moving through your pipeline, get them thinking about home ownership by having solved for the down payment problem, or at least proposed solutions and brought opportunities to the table. Also, go join our Down Payment Insiders Facebook group. Free to join, but this is a group of, at this point, well over 6,000 real estate agents and some loan officers around the country who commonly work with first-time home buyers. They commonly work with down payment assistance programs. They're sharing best practices. They're sharing challenges and how they overcame them with, DPA transactions, hiccups they faced and what they had to do to get past it. Creative marketing ideas that worked, maybe some that didn't. But the point is, it's a collection of thousands of real estate agents around the country doing business with first-time home buyers, working more and more with down payment assistance programs, and sharing what they learn. So essentially, it's a very large forum for you to engage, for you to maybe just listen in and to learn from and apply what you learn to your marketing, to your market, to your prospects. So we encourage you to go to Facebook and join Down Payment Insiders. You see the URL at the bottom there. All right. Now, with that, we're going to open up for questions. I'll pause here and I'll ask Melinda Harris, our marketing manager, and Fern White, our account manager, if there are any trends in the chat or in the questions, or if there's anything we need to address. And we'll get into Q&A here.
Sean, you might just want to mention after, we'll be sending out a follow-up after that will include a recording for everyone.
Yeah. Mel mentioned it, so we're good.
Sorry, I was reading as I was talking, but yes, we'll be sending out a recording and a follow-up after this with a recording included.
Yep. So you guys, you'll probably tomorrow morning, but we'll get that out to you soon. So what else?
Yep.
What's going on in the questions? Any trends?
Lots of questions here. I've been answering them as quickly as I am able, but a couple that I'm seeing is, I'm just looking at one. I found that down payment programs usually go up on interest rates, which I do not find helpful. Can you speak about that a little bit, Sean?
Yeah, so some go up, some go down, depends on funding source. So when you see it go up, that is typically what's called premium pricing. You'll see that with a housing finance agency. So rate is essentially opening the door for down payment assistance. So I'm not going to take sides here. Some people do or don't like it, but a lot of states do that. I will say bond funded. Now you might also hear the term bond program. That's a funding source. So the states that engage in bond activity to fund their down payment programs, you actually, on the mortgage side, you might see lower rates there. So it really depends on funding source. And it's another example of when it's appropriate and useful to talk to a loan officer about all of the mortgage options on the table and then the DPA options that come along with it. Some of them will premium price to allow for the down payment funds, but a bond program, you may actually see below market rates and then, maybe less in down payment assistance. It really depends on the program, but I mean, you're right. It's certainly a standard practice, and it's one way of funding down payment assistance. And I suppose the other part of that is the trade-off is, a little bit of rate for the cash for down payment.
Great, thanks, Sean. Another question that I've seen come up several times is regarding lenders. And what I'm seeing is agents are saying many lenders don't like to participate in down payment assistance programs. Can you speak to that a little bit?
Sure. So I will say this. We know that recently some lenders, and we're talking more about company decisions, not necessarily at the individual loan officer level. Some have backed off DPAs a little bit, but not all of them by any means. There are still a lot of lenders that are full bore working with these programs. We're seeing some state housing finance agencies creep up to or even exceed volume goals and records. So I would say, quite honestly, talk to the loan officers that still do the programs. Talk to the companies. Talk to your loan officers first. I mean, let's be fair. Talk to your loan officers first, the partners that you've always worked with, and see where they stand on down payment assistance. And sometimes it may just be that their company, has a different take on it. But see what products and programs are on the table. There's a lot of different kinds of down payment assistance too. We've talked a lot about that today. You're not limited to the state housing finance agency. There are cities and counties and nonprofits that may have other, different kinds of programs that loan officer likes, or it really depends on the loan officer. It depends on the company. But we also, through our tools, show you participating lender lists. So if you would like to have a conversation with another lender, a good place to start is the list of participating lenders that your state housing finance agency has approved and published. And, you could even in some cases find top producers, and they're great people to start with because they do a lot of these loans. They know the ins and outs. They know the nuances. They know how to set expectations, and they can help you do the same.
Great. Thank you, Sean. Just going through more. We're getting quite a few questions here. Let's see. There are a few questions about mortgage credit certificates. Do you have a minute to just kind of go through that a bit?
Yeah, is there a specific question or just kind of recap what we've...
Just a recap.
Yeah, so it's a federal income tax credit, not a deduction. Better to have a credit than a deduction. So every year, some percentage of your mortgage interest paid can be claimed as a tax credit. The cap is typically about $2,000, although it can go up. It's good for every year that they have that mortgage, and sometimes even through a refinance. So it's an annual benefit. They get it every year. It's not a one-time upfront thing, nor is it at closing assistance. It's a long-term tax credit available every year when they file their taxes, up to $2,000. In some cases, you can get a little bit more than that. And it's a great value add for anybody really, but especially as standard deductions have gone up. A tax credit looks really good right now. So I would encourage you to check with your state housing finance agency and see if your state offers one. I think about 38 to 40 states offer an MCC, and there are some local housing finance agencies in some markets that offer one as well.
Great, thank you, Sean. And I know we're about out of time here. I don't know, Mel, were there any additional questions in the chat that you see that would be helpful for Sean to answer?
I think, Sean, you've covered most everything in a broad sense. I mean, there's some pretty specific questions, but I would just reiterate to everyone that you can search for programs on our site in your market. So Sean mentioned the website, and it's there on the screen now, downpaymentresource.com, because I know a lot of people had really specific questions about qualifying. So you can narrow your criteria there. Outside of that, I'm still trying to type in answers as we talk, because we definitely had quite a few questions today. I appreciate everybody participating.
Yes, this has been great.
Okay, so we know we didn't get to all these questions, but if you have any further questions, reach out to us at info@downpaymentresource.com. We encourage you to use Down Payment Resource, and I'm going to back up here. If your MLS is one of these partners, then Down Payment Resources toolset is integrated into your MLS system on agent reports, on client reports, and you have Down Payment Connect. Look for this in your MLS on the agent single line, agent detail reports. That's where you're going to find the down payment button. Click that. That'll show you what's available for the listings that you want to show clients, or your listings as you list properties. And then check out Down Payment Connect. Again, if you're a member of one of those MLSs, you already have access to this. It is waiting for you. There's no upsell. It's part of your MLS membership with our MLS partners. And if you're not with one of those MLSs, you can still subscribe to Down Payment Connect. It's a great supplement for your lead gen, your educational efforts. Go to downpaymentresource.com/DPC. And lastly, I would encourage you to talk to your loan officers, have a conversation, engage in some dialogue about which down payment programs they work with. There are published lists of approved and participating lenders on your state housing finance agency's website. Great place to go if you would like to find a new loan officer or partner to work with or to have a conversation with. Also, don't forget about the homebuyer program providers. Get to know your municipal DPA provider. Get to know the nonprofits in your market. Get to know the state housing finance agency staff, and maybe even inquire about collateral they have and events that they host and ways that you can network with them. Those are your best partners in this process. And because we got a lot of questions about loan officers, it's good to have that dialogue now, plan for a purchase market, and make sure you have the strategic partners in place to support that effort. So if we can help in any way, reach out to us at info@downpaymentresource.com. Otherwise, thanks for joining and have a wonderful day, guys.